Go.
Look, hurry up, get this on video, man. Wally's been hanging out underneath Paulie's desk.
Oh my God.
I'm glad I finally got a witness. I've been dealing with this shit all day.
Wally, what are you doing under there?
They keep saying, oh, my computer's broken. Oh, and now it magically works, huh? oh, now it magically works.
Anyone have a cigarette?
Oh, amazing. Yeah.
Paulie
Wait a minute,
needs a
you're wearing
cup of
Wally's
coffee and a
shorts
cigarette.
and Wally's wearing your pants.
On my head, on his head.
You know how jealous, you know how jealous Kevin can get.
I plugged it out again and then put it back in and then it magically turned on.
Yeah, I fixed it when I got here. I know.
Presents, Kevin.
Never.
Just your presents.
Piece you in the phrase.
Look at that. You see gold upticking? Is that on the fucking stupid
Stupid minutes, I bet.
You've got to be kidding me. That's the most retarded shit I've fucking heard in a while. It's unbelievable. How is that even fucking possible?
What if they up the
Dude, that thing's bad. It's just a shorter version of it. Just kind of like,
Be awesome.
just get a little bit of context of where we're at.
index is taking a big dump.
What's that?
Yeah.
He's up two.
Love it. Love it. Love it. Get some. Should get hammered even more. He's just waiting. He's fucking waiting for the fucking hammer to come down. Man. He's waiting for the fucking hammer. So, he's been called for a meltdown. There you go. I rest my case. Case dismissed. So, you want to pull up a chair? And I'll
Yeah, man.
So I don't know how we're gonna do this. I mean, it's like, but we can just do a dry run.
Yeah, let's do a dry run.
Come on over here so you can see the charts, because I'm gonna be showing you on charts and shit. You can sit down. You can still move the chair there. Yeah, you don't want to sit down, man. Bring the chair right over here. Yeah. Make yourself at home, man. I mean, you know. So, all right, Paulie, keep me up to speed on news, Wally, both you guys or whatever. So, all right, it's August 19th, 2020. We're at New Paradigm Fund World Headquarters, and we're going to talk about the market a little bit. First thing I want to talk about, just because I have it up here, is Tesla. Okay, everybody's very familiar with it. So they announced their 5-for-1 stock split on the morning here. So that was a close of 1374. It's now at 1896. So 1896 divided by 1374 is a 38% move in 5.5 days. It's actually been up more than that at one point. That's 5.5 days.
New low in gold.
New low in gold. Okay, yeah, look at that. New low in gold right there. This is a 5-day chart. You see the Fed minutes came out and went up and then spiked back down. Which also, just while we're sitting here talking about gold, I might as well pull this up just to let you see what we're looking at here on like a 5-day chart. Very 5-day chart of what's Tesla? 5-day chart of gold. Sorry, we have like a little fairly obvious head and shoulders pattern. It's very clear right here in this pattern here, timed out perfect to right here. Breaks. Its target should be here at about 1953. Probably will overshoot it to some extent because definitely did not see this coming whatsoever. And actually, we can talk about gold a little bit more. If you step back to like a 30-day, this was this nice. Let me back up even further to a daily. You see how we kind of crept up here to 2000, and once we got to 2000, we spiked through it on volume. We came crashing back down the other day. There's a nice little, almost like head and shoulders-ish topping pattern here, and we'll get into more of that on another day. But suffice it to say, is like we were long gold, and we sold it this morning in here when it kind of broke. There was a variety of different reasons, including the trend line, but more so, that thing should not be dropping. As much positive sentiment as there is towards it right now, sentiment's a double-edged sword, but in the short term, it should have lent it a bid. I don't think, it should be dropping below 2,000. Should be holding on to it. Okay, back to where we were. Tesla. So that's a 38% move in 5.5 days. 38% move in 5.5 days for a $330 billion market cap, making it number 10 on U.S. market cap companies. Only right behind Walmart, which I love Tesla, I love Elon Musk, but man, that is a little extreme. That is like so far out there, it's not even funny that it's that much. Okay, and not only that just moved. What did I say that was? 1895 minus 1374, $500, more than $500 in 5.5 days. Now, all you have to do is go back and look at last October. It was a $260 stock. It was $260. Okay, so if we take this chart and move it all the way back to, like, let's say 2014, you can see that, this, is that correct? Yeah, that's a lot. Let me put it on a logarithmic chart because you can't even see it from there. Okay, if I put it on a logarithmic chart since 2014, okay, you can see that this was a $300 roughly to $150 stock for a long time, crept up to $400 in 2017, but 10 months ago, it was a $250 stock, okay? 10 months ago, it was $250. So in 10 months later, in 5.5 days, that stock has put on double the market cap of which it had for basically the prior 6 years. It took 5 days, 5.5 days, for them to add double what their market cap was 10 months ago. It's not unheard of. It happens in names, but it certainly doesn't happen in names that are that big. I cannot recall anything like that. It's totally unprecedented. The only thing that I can think of that even comes close is Qualcomm in 1999. What happened to Qualcomm in 1999 was, this company was coming out. They were making semiconductors for cell phones, and they were going to be the brains behind this new wave of cell phones that were eventually going to have video, and you were going to eventually, many years down the road, going to be able to browse the internet and blah, 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 all these things. All of which came true. All of the things that people were hoping about for Qualcomm ended up coming true. However, the stock was so far ahead of itself in 2000 that it didn't come back until 2020. It didn't reach those highs again until 2020. So if I pull it up right here, you can see on a logarithmic chart, here's like the last 2 years. But if you look back at the last 20 years, you can see this period when it was going up here, straight up in 1999, okay, and it was obviously, now this is like I said, this is a logarithmic chart, so this move from right here is 100 down to 2.5 years later, 11, okay, so we had quite a drop, 90% drop almost. It took 20 years for it to get back, okay. I think we're seeing something similar in Tesla, okay, but this one is even more amazing because the market cap is even bigger, okay. It's like I said, it's the 10th biggest market cap company in the United States. They may have the most amazing future. But let's just grant that everything the bulls are saying is going to be true. Everything that they're saying is going to be true, okay? It's still, you're going to have to deal with the vagaries of inventory and the cost of goods and labor and a million other things that are going to determine how profitable they are on all those future potential revenues. And suffice it to say that the stock is probably a little bit, ahead of itself. I'm not saying anything new. There's a million people who are Tesla bears out there. I'm not a Tesla bear, and I'm not short Tesla. You know why? Because I like keeping money. I don't like losing it. And right now, the animal spirits are at work there, and so I don't want to have anything to do with it. And if we get a tradable opportunity, long or short, we will take it. But for the time being, I don't feel like I have much of an edge, other than to say that I don't want to be near it. Okay, just sometimes the trades you don't make are the most profitable ones. Because you didn't lose anything on it. But back to where we were before. Do you see any news, by the way, that's driving the market other than the stupid Fed minutes, which I'm sure mean nothing? Okay, so I just want to give a little bit, the whole purpose of this, getting started, was just kind of give a little background on where I think we are in the market in general. Okay, this right.
Now down 540.
What's down 540? Gold.
GLD.
Look at that, down $60 on the commodity. Look at that. Well,
Well,
there it is. That target I was talking about is almost getting hit. I mean, let's pull it up. Let's pull that up and see if that stop loss, the target is getting hit on that head and shoulders. Let's see. It's probably pretty close. So I was saying, it's like literally you could go from long to short that thing in a nanosecond. And yes, it just literally got hit. That was quick. That was a fast trade. Too bad we didn't have any. That was a good trade not to be long. Anyway, so that literally just dropped what? Gold just dropped like, I don't even remember what it was, maybe $15 since that time, since this interview started. Anyway, so I still, the fact that it's even down, it has me a little worried. I'm not interested in picking it up here. If we see a little bit more pain and suffering and it comes back down into last week's lows, I'll be interested. But for right now, we have no position in gold, long or short. I'm not really, it's on my radar, but I'm not, I don't have a preference. And that's the way a lot of things are in the market right now. And I'm about to describe why, okay? So let me.
Fed sees a less robust second half recovery.
Okay.
So that's, I think it's.
All right, here's a chart of the Qs for the last year. You see that late last year they were rallying. They really had this beautiful, nice rally into year end and into February. Here's the COVID move. You know, drops 35 something like that %, and then it's done nothing but rally. Okay, it's been one hell of a rally, and you had a lot of bears, and then they're getting bullish very, very slowly, and only recently does it seem like everybody's bullish. What did we just get hit on? You see? I don't know, it doesn't matter. It was small, whatever it is. We have small buy orders. And so now what I want to do is close up on this and see what kind of patterns we can detect on where the short-term movements are going to be in the Qs, okay? And so I'm going to go into just basically the move since right before March 23rd, and you can see that there's a very regular, a beautiful trend. I mean, it's a beautiful pattern. Now, it depends on where you draw your trend line to see where it works. I mean, sometimes when you draw them right off the low, there's a lot of volatility, and then things kind of calm down and you get a little more regularity. But what I want to do is just kind of look at, if you close up on any one period, okay, like let's say this period right in here from the middle of March to the middle of May, you see a rally, you see a nice decline in the Qs, you see a rally, and then there's this is a decline from, let's see, 220 to 210. It's about a $10 move. In percentage terms, it's going to change as we go out. Obviously, when the market goes higher. This was a drop here from 215 to 203. That's a $12 move, a $10 move. Here's this one here a little bit later from 228 to 216, $12 move. And so what I want to try to do is just figure out, just detect what are some of these patterns, okay? So if I back up from right here, okay, we have basically, you don't need to follow me too much on this, but you have one move up, one move down, two moves up, two move down, 3 up, 3 down, 4 up, 4 down, 5 up, 5 down, 6 up, 6 down, 7 up, 7 down, 8 up, 8 down, 9 up, 9 down, 10 up, let's say, okay? And so what happens is if you look at these, they're pretty regular. I've kind of written them down here, but there's an average move of about 8 days up. Okay, it's all close up on a period again here. Let's just close up on. It could be anything randomly. Let's just say this period right here. Okay, you have a period where the bottom is made. Okay, it goes up for 1, 2, 3, 4, 5, 6, 7, 8, 9.5 days. Okay, drops for a day. Goes up for 1, 2, 3, 4, 5 days, drops for 3 days. But the regularity with which it's moving up and down has been fairly constant, okay? It's what you're getting is about 8 days of rally, 2 days of decline. A lot of the declines have been 2 days, 2.1 days, 2.2 days, 2 days, assuming that an hour is 0.1 of a day. And given that, and assuming that's correct, and we don't necessarily have to go into all the detail right now, it would be very boring to run you through all of that, and it would take a lot of time. Suffice it to say that we are now 1, 2, 3, 4, 5, well, 5.5, because we're really dropping our butt right now, days into it, which means we're pretty dang close to a period where it's ready to go, in terms of price and in terms of time. And what we should see, on average, is about a 12, 13, 14 point move in the Qs lower, which would give us if it's 279, we'd say like a minimum of 269. Maybe 265 would probably be more accurate, okay? And so what I'm looking at too is to kind of clue me into that we might even see more than that. But just to move to the S&P, because it's easier to see the gaps on an S&P chart, okay? If you just look at since the most recent move off the lows here, you have a gap here on the first of the month at 32.71. Okay, you have a gap. Let's see, 32.71. You have a gap a couple days later at 33.06. You have a gap 4 days later at 33.33. These are not runaway gaps. These are gaps that will get filled. Almost all the time, these suckers are going to get filled, okay? Maybe this one won't get filled. I won't go into detail why right now, but maybe this one won't. But the rest of these are going to get filled. So this one's going to get filled. This one's going to get filled. Probably this one as well, too. So if those Qs were to move to 265, you can imagine that the S&P on a daily might move down here to 33.14 to its 20-day moving average, which has been some support in here, with support in here. In general, 20-day moving average is going to provide support a lot of times, okay? We could see that. But what has me really intrigued by what's going on is two things. Number one, the sentiment. You watch these guys on CNBC. One of the easiest trades was to be long earlier this year, March, April, May, because even in May, when you're 2 months off the low, every bozo that came on TV was bearish. I mean, every stinking one of them just about. There were a few bulls, but almost. Whereas a lot of people who were trading from home, smaller guys, were doing very well, were very long. And so I love markets like that, okay, where the professionals are missing out, but everybody else is at the party having fun. The professionals are like, don't go there, man, don't go there. They're bad. Anyway, so I want to point something out with the Qs here, okay? So just for a little reference point, I've been watching how long this has taken for the Qs to move. Okay, so now everybody's bullish, remember, okay? So you've had all the professionals are bullish. I think everybody's bullish, but this move has taken 1, 2, 3, 4. It's basically right at about 5 months. We were on the 23rd of March. It's now the 20th, what is it today? The 19th of August, okay? That's almost a 5-month move. If you look at what happened in late 29 after the, get through trouble with China and they, we start running into the next year, okay? You have a 1, 2, 3, 4, and about 3/4 months move, okay? So things lately have been moving in cycles like that. You can see here's the move off of the December 2018 lows. You have a move that's 1, 2, 3, 4.5 months before you have a meaningful correction. You can go back to 2018, we had a top there, and basically after things go sideways for a while and it starts moving up again, it's 1, 2, 3, 4, 5.5 months move. So you have between 4.5, 5.5 months. You can start looking for some type of a pullback, some type of a correction. Look, this doesn't last the test of time. The market is constantly evolving, and this same strategy wouldn't work, 6 years ago or 60 years ago necessarily. And obviously patterns are made to be broken, so who knows if it's going to work this time. But we have a huge confluence of events which make me feel that in the short term, we're due for a pullback. In the maybe not long term, medium term, we're due for a pullback. But the biggest reason why I feel like we're there, okay, is that, like I say, the sentiment from the people on TV and the people we talk to and everything is almost like they've already assumed that the S&P is broken out into new highs and it's like, powering through. They've already assumed all these things. This very same people who were raging bears and wouldn't even consider the possibility that the market could go up 3 months ago now have the exact mirror image point of view, okay? And so, look, that doesn't mean the market has to go down here. We're actually not short anything as of now. We just have a few longs on, few and far between, not many. And I'm open-minded. I mean, the one thing that's going to happen is we're going to be wrong a lot. But when we are wrong, it's okay to be wrong, okay? It's just not okay to stay wrong. So you have to have stops for whatever trade you're putting on. You try to be wrong small and right big. And let your winners run. I'm not giving you any new information here, so everybody should know this, but that's what we're trying to do here right now is just we're being patient. And a lot of times, let me tell you this, when the market was coming up here, there was nobody expecting that the next move was here. And they couldn't even tell you what it was going to be, okay? And so I can't tell you what the news is going to be. I don't know what the fundamentals are going to be and on why it's going down, why it's a possibility it's going to go down, but we're very aware of it, we're watching it. And if we get the trade right, we're going to make a lot of money.
Is that Cristiano Ronaldo?
And if we get the trade wrong, we're going to lose a little bit of money because we'll be like, okay, we're wrong, or we're not right yet. We'll take our time. We'll get back long, or we'll be out, or whatever. And that's the basis of trading anyway. It's like try to have big winners and try to have small losers, and you can manufacture that formula as much as you want to be as aggressive or non-aggressive as you want. Anyway, that's it for today. Thanks.
Thank you.